If you had to bet all of your money on one single asset for your next trade, would you choose a 5,000-year-old metal or a 15-year-old internet coin? Gold is the world's oldest store of value. On the other side, Bitcoin is its digital rival. But which one's better to trade right now? By the end of this video, you will know exactly which one gives you the edge in speed, profits, and strategy. Currently, gold has a market cap of $23 trillion, yes, with a T, and Bitcoin has a fully diluted valuation of $2.47 trillion. Of course, BTC's market cap is nothing in comparison of gold, but both of these things are going to play a very crucial role for deciding on which asset you choose to trade on. In theory, since BTC has such a high market cap, it's going to be very difficult for it to have huge price movements. Whereas in BTC's case, because it does not have as huge as a market cap of gold, moving BTC's price 5 to 10% in a single day is not that of a difficult task, especially now that institutional money like BlackRock and MicroStrategy are involved and are acquiring BTC every single day. If you are planning to become a day trader or a swing trader, remember that volumes on both of these assets are going to be your best friend, because higher volume equals higher volatility, which equals better trading opportunities for us. Gold in the March of 2025 reached an astonishing daily trading volume of $300 billion, while BTC averages at $50 to $60 billion worth of volume each day. Of course, BTC's daily trading volume is set to increase because of all of the action that has been happening around BTC lately with all the institutional money involved. For the sake of knowledge, let's compare the historic returns of gold and Bitcoin. Gold over the 25 years has generated close to 10.9% of annual return, which is somewhat high as compared to other indexes like S&P 500. Whereas if we turn our faces to Bitcoin's compounded annual growth rate, you are going to be surprised. As of 2024, BTC's compounded annual growth rate over the past 4 years has been 56% on an average. Does this mean that you take all of your money and start trading on BTC? No, that isn't the case. This compounded annual growth rate of over 50% comes with its own risk, like very heavy volatility. Let me show you on chart what this exactly means. This is Bitcoin's chart on a daily time frame. If we take a look at what it has done in the past month, then we would be able to see that it has risen by close to 20% in just one single month. If we compare this price action to gold, then you would be laughing, because in the past month, gold has only moved by 2.36%. I'm just eyeballing this. I'm sure that the movement is going to be much more lower than this if we take a deeper look. But yeah, this should give you an idea on the way both of these assets move. Of course, this does not mean that gold is not a good asset to invest into. For the first half of 2025, gold has gave a return of close to 26%. To be honest with you, this in comparison to BTC is nothing, because BTC manages to move this much in just one single quarter, and therefore comes with much more significant risk than holding gold. Bitcoin's one-day move can anywhere be from plus minus 5 to 10%, while even a plus minus 1% daily move on gold is considered to be very huge. This simply means to generate a decent amount of profit on gold trading would mean that you either use a high leverage or overall you have a very huge position opened for trading gold. Whereas on BTC, you could somewhat play around with a low leverage as well as a lower position size. So technically, Bitcoin is for traders who want action because it has daily breakouts, momentum, volume, etc. This in turn is going to mean that you are going to have a lot more anxiety and a lot more stressful trades, because there are really high chances that you are going to have to be on top of all of the trades that you take on Bitcoin. Whereas gold, you can expect it to be a bit steady, not a lot steady, but a bit steady. And this in turn would mean that there is less drama, but also slower gain. Let me share you my trading plan and what I'm going to do with BTC as well as gold. With Bitcoin's price sitting at an almost all-time high of $120,000, here I'm waiting for it to retrace a bit before I scoop up some Bitcoin on spot or open an overall short position on BTC. And for gold, I might open up a spot position at exactly this price, wait for 1 to 2 weeks for it to go higher and then sell. I don't want you to think that trading on BTC and gold is as easy as buy low and sell high. There are countless of factors involved, lots of confluences, lots of indicators. You have to take a look at what the market is doing, news, volumes, liquidations, etc. So make sure that you're spending enough time on researching what you are doing and only then open up trades on BTC or gold. Now the question stands, which side are you on? Do you like BTC's high risk and high upside, or do you like gold's slow and steady movements, which of course means a cap on returns? Let me know in the comment section, and if you are still watching this video, make sure you hit that like button and subscribe to this channel. Thank you for watching and see you again in the next video.